Turkey, located between Europe and Asia, has submitted a formal application to join BRICS. As President Recep Tayyip Erdogan's administration has said, the geopolitical center of gravity is shifting away from the developed economies. Perhaps this vision of the situation makes sense. It's proven by the fact that German auto giant Volkswagen is considering closing some factories in its home country for the first time in history. It's a serious blow to the European economy and the West as a whole. The lack of progress in its decades-long quest to join the European Union is one of the main reasons for Turkey's desire to join the BRICS group. It's also partly the result of disagreements with the other NATO members after 2022. Turkey can become a strong, prosperous, prestigious, and effective country if it improves its relations with the East and West at the same time, Recep Erdogan said during a speech in Istanbul over the weekend. With inflation in Turkey at 60.2% in July, the country's president really needs to think about changes. The attention of global markets is increasingly focused on economic statistics from the United States and its impact on the prospects of the Fed rate cut on September 18. The rate cut is now beyond question. In this context, the US dollar index, which measures the greenback strands against six rival currencies, is trading lower today in a narrow corridor of 101.50 to 101.70 points. At the same time, the situation in the currency market is changing little, since the crucial report on the US labor market will be released only on a Friday. All other economic data is of secondary importance. Markets certainly are looking forward to the US non-farm payrolls for August. September is traditionally considered the worst month for Wall Street. So far, the US stock market has been showing dismal performance. The S&P 500 index recorded the worst result for the beginning of September since 2015. Moreover, the US stock market experienced its worst day since the collapse on August 5th. To sum up, the S&P 500 index tumbled by more than 2% to 5,174 points. Investors are again concerned about the recession scenario in the US. This sentiment caused a sell-off of risky assets and kept the S&P 500 index fallen within an intraday corridor of 5,504 to 5,624 points today. This stagnation on the forex will continue today, although the reports on the open vacancies in the US can add adrenaline to traders. However, the report takes into account the data from a month ago. That's the results of July. Considering that they concern the labor market, the increase in the forecast to 8.1 million can breathe new strength into the US dollar. On the other hand, the lack of emergence will not allow investors to draw the right conclusion regarding the current state of the labor market in the United States. We talk in more detail about the impact of economic statistics on forex instruments in our regular traders calendar. The euro-dollar pair has been going through a downward correction for the third day in a row. Today, the instrument is testing the psychological resistance area of 1.1000 to 1.1050. At this stage, this area serves as a crucial level for sellers. Thus, it restrains a further correction for the euro-dollar pair. To continue the correction cycle, the pairs need to go through several stages. First, they have to shift the current channel to the lower level of the psychological area of 1.0950 to 1.1000. Then the price has to consolidate below this level. In the case of an upward scenario, the euro might begin its recovery within a rebound from the same area. The euro-dollar pair has to settle above 1.1100 on the daily time frame. Interestingly, Bitcoin has wiped out almost all of its growth over the past months, over the past 24 hours. This morning, the flagship crypto slumped to its lowest level since early August on the Asian exchange to $55,625. And today, the number one crypto is trading in an intraday corridor of $51,676 to $57,897, as investors are poised for a wait-and-see approach, unwilling to take risks. Today, crude oil also tumbled to its lowest level since December 2023. For several days, there were rumors in the market that OPEC and its allies might pump up oil output rates starting in October. Yesterday, several representatives of the cartel confirmed this information. As a result, the benchmark Brent grade plummeted by more than 4% yesterday. As a result, its price through the support area of $75 to $75.50 and thus moved completely into the bear zone. At the moment, there is a strong technical signal that Brent is being oversold, so pullback scenario may be activated. At the same time, the local low of December 2023 at $72.3 and $73.50 per barrel may act as a potential support. However, one should take into account the possible influence of a speculative inertia, which may ignore many technical factors. Curiously, the Russian ruble behaved strangely on the back of falling oil prices, demonstrating a strong advance. Currently, the Russian market is currency market is secluded, and the influence of global developments is insignificant. So the ruble's strength is explained only by a sharp increase in demand from a large buyer, and this is exactly what happened. If our assumption is correct, then the ongoing rally of the ruble will be local in nature. Shortly, the dollar-ruble pair will likely go up again and rebound to 90 rubles. All in all, there are no fundamental reasons for the growth of the Russian ruble. That's all for now. How we're going to be in the short term in financial markets, we will definitely tell you in our next news release. Subscribe to our channel and follow news with us. Which currency will benefit from the game-changing geopolitical environment? The Turkish lira, the Russian ruble, or the US dollar?